Hello, welcome to European Open Briefing for Thursday, October the 18th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. The US dollar bounced higher yesterday following the release of the Fed's September meeting minutes, where policymakers maintained their hawkish stance. We can see the dollar index is doing rather well at the moment. It's currently trading around 95.61, marginally higher from yesterday's close. Dollar yen recovered back to around the 112.50 level. It's slightly down at the moment from yesterday's close. If we have a look at equities, we can see they're fairly mixed this morning. We did see the higher treasury yields as a result of the hawkish Fed minutes weighing on US stocks. Dow Jones and S&P both closed slightly lower. In China this morning, there were renewed worries about the potential negative impact from the US-China trade war. We can see Chinese indices closing down by more than 2%. Other Asian indices were mixed, and we do have a somewhat positive start though in Europe. We can see though that the euro is it is marginally higher at the moment. It was earlier, had fallen below the 1.15 level. It's now recovered a little bit heading into the European session. Sterling is slightly down, though both pairs are off their lows. The euro did come under pressure yesterday as there was a spike in Italian government bond yields after EU officials signaled that they would not be accepting Italy's budget plans in its current form. Sterling also came under pressure as the EU summit that started yesterday and it will continue today is unlikely to yield a deal on the Brexit withdrawal agreement, and there's talk of extending transition period, which could mean a delay to a final deal. We also had weaker inflation numbers out of the UK yesterday, so sterling did fall below the 1.30 level. It's now recovered a bit though, around 1.3115. Having a look at the Australian dollar, it's not doing too badly this morning. It's up by 0.3% at 0.7130. We had stronger than expected jobs report out of Australia earlier, so that gave the Aussie a bit of a boost, though we are seeing a weaker Chinese currency this morning, so that's somewhat capping the Aussie's gains. If we have a look at the Canadian dollar, yesterday it fell to 1 week low as we had that big drop in oil prices following the weekly inventory numbers out of the US. We saw a big build in crude stocks in the US, so we saw sharp losses in oil prices yesterday. WTI crude falling below the $70 a barrel to 1 month's low. The loonie is slightly extending its losses this morning at 1.30. And having a look at the main performers, we can see Aussie dollar at the top of the table, followed by the Kiwi. Dollar Swiss franc is the biggest loser this morning. Dollar index marginally higher. Having a look now at the dollar index in more detail, we can see it had fallen to a 2.5 week low a few days ago. It's now recovered to a 1 week high. We did have that Fed meeting minutes, which, as expected, the Fed maintained their stance that they would continue raising interest rates gradually, and this view was supported by all FOMC members, and so they're obviously ignoring President Trump's calls for a pause in rate hikes. So this hawkish view did push the 10-year treasury yields to a 1 week high, and that is supporting the greenback this morning. We also finally had that publication of the US Treasury Department semi-annual currency report. As expected, the report refrained from naming any country as a currency manipulator, although it did keep the existing list of countries on its monetary list, which includes China and Germany. Having a look at what's happening to sterling, it had recovered early in the week to around 1.3230. It's now fallen to more than 1 week low, 1.3073, as a Brexit deal is looking very unlikely this week. So the stalemate is still over that Northern Irish border issue. There's a proposal to extend the transition period. And so basically this would be an alternative to the backstop solution, but this could be controversial as it might struggle to get passed through UK Parliament, even if Theresa May was to accept this. And so and even if it did get approved, the transition period would possibly add further uncertainty, a longer period of uncertainty up until a final deal is made on the future trading relations between the UK and the EU. So this is weighing on sterling this morning. It had, as we saw, it's now recovered above the 1.31 level. Yesterday we also had weaker than expected inflation numbers for September out of the UK, so that added to sterling's downside. And finally, quick look at the Australian dollar. It did briefly touched 0.7137 following the Australia's employment numbers. Although employment growth was less than forecast, the unemployment rate did fall unexpectedly from 5.3 to 5% in September. Although we did see the Aussie losing a little bit of steam later on, as the drop in unemployment was mainly due to a fall in the participation rate. We also have a weaker Chinese yuan this morning. Dollar yuan hit a 21-month high. The People's Bank of China set a much lower midpoint this morning following the publication of that currency report from the US Treasury Department, where China avoided being named as a currency manipulator. So possibly the PBOC taking advantage of that by setting a lower midpoint. And finally, looking at what's coming up later on, UK retail sales will be in focus shortly, followed by US jobless claims. That's it from me. Thank you very much for watching and have a great day.